Okay. Now, guys, now the most important summary. Having learned all that, you should now know the difference would be lying like this. If you did finance lease, okay, under IFRS US GAAP, would you potentially show IFRS US GAAP and operating lease under US GAAP? Okay. Yeah. So balance sheet liability would be same because you're showing the present value of lease liabilities, right? But in an operating lease, you're showing the ROU asset in your books. Okay. If you're showing the ROU asset, operating lease. Income statement earnings in the earlier years, right? You're going to show interest expense. So therefore the income will be lower, right? Here it is higher, but later it will change. EBIT will be higher because more amount is showing expense and here some amount is showing towards interest also, right? Okay, and interest expense obviously is higher because here you're showing finance lease, so you're showing more interest. But here the amount is lower, interest expense because the amount is not going to interest, it's going to expenses. Here, CFO will be potentially higher here because of the interest adjustment and depreciation impact here. And financing cash flows effectively be lower and higher under the two caps. Okay. The only thing that is safe in the both is the fact that your finance lease liabilities is recorded at the present value of future liability is $378,000 because that liability has been recorded anyways, right? Now till now I've taught you lessee accounting. Now let's quickly go to lessor accounting. Honestly, lessor accounting is a little bit straightforward and simpler. First, we try to mirror the two, and second is it's a little bit more straightforward. Lessee was the person who took it on lease, right? The lessor is the person who has given the asset on lease. He has given this on lease. Understand carefully. Here, there is a difference in finance operating lease. Where we said there's no difference, understand here. If he gives on finance lease, right? He gave it on finance lease. Is the asset effectively given away?
No, he will get it back.
No, hang on. Finance lease means he has given the asset for most of the lease. Agree?
Yes.
So effectively, do you agree that the asset has effectively been sold?
Right, written off.
Right? He has given the name of a lease only to fool us. But effectively, the asset is sold.
Yeah.
Agree or not? Because he's given a 5-year life for 5 years. So what will he use after 5 years? Nothing. If he effectively sold the asset, he is supposed to derecognize the asset and show it as a sale. Even though the asset belongs to him, after 5 years, there's no use of the asset. So in a lessor, he's a boss, asset is gone. Let's say that will take an ROU asset because he says assets come to me. So he has to also show the assets going out. If both show assets, that's a problem, no? Therefore, that fellow shows an asset, ROU. This fellow shows a derecognition of the asset. He removes the asset from his books. The day he did an asset, he's supposed to record again almost, whatever it is, right? And he'll follow the exact same thing. He will show a receivable, that will show a payable of 379, he will show a receivable 379. That will show an asset 379, he will show sale of 379. So whatever the other guy did, I showed you last time, is exactly the opposite that this guy will do. If that guy recorded an asset of 379, he will record a derecognition, means a sale of asset of 379. He recorded payable, he'll record a receivable of 379. Understood? Got it? So this guy is the mirror image of the other guy. Lessor, lessee. Are we clear there? Now, if we gave it an operating lease, you know the answer. Common sense, asset remains in his books. It doesn't go out. Correct? It is a lease rental. It is not financing activity. And whatever income he receives every year will be straight line basis. He will record 100,000 P&L every year. That's it. No asset, no depreciation, no amortization, nothing. 1 lakh every year. This is how simple it is for a lessor. Lessor, two things. Operating lease, 1 lakh every year, nothing further. Finance lease, he will record receivable, he will record asset sold. Are we clear? Receivable, asset sold. What did really pass for this? Come on. What did really pass for this journal entry? Now you tell me. Debit what? Lease receivable, right? Right or no? Lease receivable and credit what? Credit what?
Sale of asset.
Good. Credit sale of asset. So basically it's crediting the fixed asset which has gone out. Correct? But because he created fixed asset, he'll also, is he getting cash today? No, the cash comes every year. He will also credit or debit any gain or loss. So here he'll create debit 379. He'll also create 379. And if this asset, right? Now obviously he sold the asset at 379. If the asset was in the books at 350, he showed 350 and he showed gain of 9. So this is the balance. Are we clear? So by doing this, the asset has gone out and a new asset has come in. Are we clear? This asset, you will wonder what he'll do with it. Simple. Every year he will receive cash. Correct? And what he'll credit? He'll credit the lease receivables and what else? What else is credit? Because he's getting 100 every year. He'll credit lease receivables and what else he credit? He's crediting lease receivables 100 every year. He'll come 500. How he got 379? What's the balance figure? What is the balance figure? What is that? Interest. You did that, the interest amount in table. This is the interest amount. He'll create LR and interest. First he'll record interest 37. No. There were 37,000. And lease receivable will reduce by 63. 62, 63, right? So 37, 63. They'll reduce 31, 69. Got it? So then the same entry will pass, but he'll take it to lease
So over there we took that under debit.
Exactly. Correct. Exact opposite. Everything you did there will be opposite. Because there it was a loan payable, this is a loan receivable. Are we clear with that? This completes your lease accounting from a lessor point of view. Lessor is the giver. Here? Okay. So can you just quickly make a note of the accounting entries? Debit, lease receivable, credit fixed asset. Good gain or loss is the difference. And this amount will go every year as debit cash, credit LR and the interest component. The same numbers will work here also.